as you mentioned, the election is really important. A Harris win will basically be policy continuity, and that means that investors know what to expect, and it's a predictable business environment. If Trump comes in, well, there's more uncertainty, right? So if he were to implement the combination of tax cuts, mass deportations, and tariffs, that could potentially result in a supply side shock, which could lead to higher inflation, and it could lead to the Fed having to hike a little bit. And that would cause significant market unease and uncertainty. And so you could see a situation in which the dollar strengthens on the back of that. But still, we think that if Trump were to win, he would probably take a little bit more of a pragmatic approach, just because the markets and also the congressional legislature would probably try to taper some of the bigger policies that he's trying to implement in terms of threatening a 10% blanket tariff or 60% tariff on China.
Cedric, the markets seem to be, amid all of this uncertainty, doing a pretty admirable job getting over the wall of worry, which just continues to rise. You have the concern about the debt and the deficit. You have the tariff escalation potentially under a Trump administration if it comes to that. And then, of course, you and I were talking about this earlier. Israel-Hezbollah conflict threatens to erupt into an all-out war. Are markets being woefully complacent, too complacent about the balance of risks as you see it?
Absolutely. So there are lots of risks to be mindful of. There might be some complacency, particularly in the Middle East, just because of the potential escalation and the regionalization of the war there. But ultimately, I think there are a few factors which are supporting global risk assets. So first of all, from a Middle East perspective, I think there's a big incentive for other nations like Saudi Arabia, for example, to try and de-escalate this through back channels, because their economic progress, their economic development models depend on regional stability. The second thing I would say is that now that with the Fed easing or in more easing mode, that's providing a lot more lift, reducing financial costs. So you look at treasury yields, they're coming down. That's providing a lot of kind of relief for a lot of borrowers, households, for example. And that's injecting liquidity into the market at the same time that now we've seen China do a combination of monetary and some fiscal stimulus as well. So there's a lot of stimulus in the economy. And the last thing I would say is growth has been holding up. Earnings have been holding up. So there is a lot of risk, as you mentioned, election, debt ceiling, geopolitics. But generally speaking, the economy is doing okay for now.